Alright fellas, welcome back to this beginner trading videos for options. Now, last video we went over the basics of options plays, how to leverage options, and how to use basic options such as long calls and puts. Today we are going to be going over more of the advanced options plays, what's called a cash secured put. Now, cash secured puts are one of my favorite tools as an investor, and let me tell you why. Have you ever thought of getting paid to buy a stock that you want? I know that sounds fucking crazy, but that's exactly what a cash secured put does. It pays you for the premium for you to wait to buy a stock that you want at the right strike price. It might sound a little bit complicated, but let me break it down for you further later in the video. Now, we are going to be using some real world examples to give you guys an example of what a cash secured put does and why it's one of my favorite tools as an investor. So without further ado, let's get right into it. Alright, so here's the deal. When you sell a cash secured put, you're basically saying, I'm willing to buy 100 shares of a stock at a specific price. If it drops, I'll set that aside cash just in case. And in return, you get paid a premium money up front. The premium is paid to you up front. You do not have to wait until the options play expires to receive that premium. Now, for example, let's say Nvidia is trading at $125. You sell a cash secured put with a $115 strike price, and let's say you get paid $400 for that premium. If Nvidia stays above $115 when the expiration date comes, you keep the $400 premium. You don't buy the shares outright. And if it drops below $115, you're obligated to buy 100 shares of Nvidia at that price, which you were going to do anyway. Now, this is way better than setting a limit order, because when you set a limit order at the price that you want it to be, you don't get paid a premium up front to wait for that stock price to hit that limit order. If you compare it to if you sell a cash secured put, you get to be paid a premium while you wait for the stock to hit that strike price. And if it doesn't, you just keep the premium. If it does, you get to buy the stock anyway. Now, I like using this play for stocks that I want to buy at a specific strike price instead of setting a limit order and waiting for the stock to hit that price. Now, there are a couple possible scenarios and outcome when the options play expires. So the first scenario is Nvidia stays above $115 strike price. So you get to keep, if this happens, you get to keep the $400 premium and no shares are bought. And the second scenario is Nvidia drops below the $115 strike price. So you would buy Nvidia at $115 at your strike price. So let's say Nvidia closed at $110. You're still obligated to buy 100 shares of Nvidia at $115. But since you already got paid a $400 premium, so your effective cost is $111. So you basically still bought Nvidia on a sale technically. So scenario number 3 is if Nvidia crashes. So say you're stuck at buying Nvidia for $115. If Nvidia tanks to $90, which is way under your $115 strike price, you're still obligated to buy Nvidia for $115. Even though if you got paid a $400 premium, your real cost is $111, but you're still down significantly. So this is the major downside to cash secured puts. If you use it on a stock that is significantly going to go down below your strike price, you're still at a loss, but you wouldn't have been better off if you would just do a limit order anyway. And another pro I like about cash secured puts is that it will set you money aside in a brokerage app. So basically the money that you set aside as collateral to buy those 100 shares of Nvidia can be still accruing interest in the brokerage apps. Say Webull is paying like 4.1% APY on their uninvested cash. That money set aside as collateral to buy the 100 shares of Nvidia is still collecting interest while you wait till the date of expiration. So I guess this is the same as a limit order, but if you were to do a regular options play, that cash that was set aside would not be incurring interest. Alright, so now that you got a basic and brief understanding of how cash secured puts work, let me give you guys a real-time demonstration of how to sell a cash secured puts using my own Webull account. Okay, so for this demonstration, we're going to be using my Webull Cash account. If you're on Fidelity, if you're on Robinhood, if you're on Charles Schwab, that may be very different. But for now, we're going to be using what's called a cash secured puts on Webull. All right, so when you first open up Webull, you're going to be taken to the watch list or your homepage. So how to get to the cash secured puts page? So first, you want to go to the stock that you want to sell cash secured puts on. In this case, we're going to do NVIDIA. So after you reach there, you're going to hit options, and then this will take you to the options discover page. And from there, you would hit cash secured puts on a single leg strategy. Now you can also find it if you click on the bearish outlook. From there, you will also find the cash secured put strategy. So from here, you would be able to see the strike price, the date, and from down there, you'll be able to see the max profit. The max profit is basically the premium you'll be paid to sell this cash secured puts. The max loss, don't worry about the max loss, guys. Don't get freaked out. This is basically saying how much the stock will cost if the cash secured put was to go through. So let's say we want to sell cash secured put for July 18th of next week for, let's say I want to buy NVIDIA at $160. So in this case, we would set the strike price to $160. And in this case, we will receive a premium of $109. And the max loss is $15,891, which is basically $16,000 minus the $109 premium. If you were to buy NVIDIA at $160 per share times the 100 shares, that's $16,000 minus the $109 premium, which would be equivalent to $15,891. Now, after you hit next, this will allow you to set the limit, whether you want to be a limit order, a market order, and the limit price of the contract, and how many contract you want it, and how many, whether you want a time enforced day or a good till cancel. Now, this limit priced option is what I like to play with the most. This limit price is basically saying how much premium you want to receive for selling this cash secured put. So, however much you set this limit price to, it will only sell a cash secured put if that contract reaches that limit price. So say I want to sell the cash secured put for the ask price of $1.11, which means I will receive $111 for the cash secured put. If I was to set it to 1.09, I will receive $109 for the cash secured put. This is multiplied by 100 because each contract is 100 shares. All right, guys. So I'm not going to do it, obviously, because it's Saturday. I'm making this video on a Saturday. So once you sell the cash secured put, you will see the funds be credited to your account immediately. And once the expiration date comes, whether or not the strike price falls below what you initially bought it for, it will always credit you the premium. So how we can actually find where you can see the premium received. This is a little trick. I had to do some digging to find how we can see what the premium received. So basically what you do is once you go to the P&L section of your Webull, this might be different from Robinhood, Charles Schwab, or Fidelity and all that. And then once you go to history, and you're going to click on order records, fund records. From there, you can see your cash secured puts and the premium received for selling it. So here you can see I sold a Tesla cash secured put, received $67 for the premium. All right, guys. So now that you guys have a basic and brief understanding of how cash secured puts work, in the next video, we are going to be going over a covered call, which is pretty similar to a cash secured puts, but is on the opposite side, which is a call. I hope you guys enjoyed this video. If you have any questions or concern, feel free to shoot me an email, a DM on Instagram, or comment down in the video. Like I said, I hope you guys stay safe when investing. Always make sure to do your own research before you make a financial or investment decision. I'm not a financial advisor, so don't come running at me and fucking yelling at me when you lose on an investment, okay? All right, guys. Hope you guys stay safe out there, and see y'all next time.